Of course, we have seen quite a bit of volatility coming to the fore. Do you think we can start seeing a bit more of a stable Naira going forward?
Okay, thank you for having me. Yes, we expect stability in the Naira going forward because the CBN has been successful in managing the volatility that we saw in September and October. Demand has reduced considerably looking at the auctions from September up to now, and we also suspect that a lot of market players had brought forward their FX obligations in the time of uncertainty in September and October. So we do expect the Naira to remain stable and possibly appreciate. The CBN would also get some help from oil company supply in coming months, and we have also seen foreign currency flows which we expect will bring in dollar liquidity into the market, as there has been renewed interest from foreign investors in the money market due to the yield uptick, and also in the equities market. So the Naira should remain stable in the short term.
Or when you say it might appreciate, to what level are you thinking that we could see a little bit of appreciation?
The CBN has held fast to its plus or minus 3% band. So currently it's at 150.19, and 150 seems to be right in the middle. So you could say plus or minus 10 kobo from existing levels.
Taking a look at the 70 billion Naira sovereign bond that is set to be auctioned next week. Of course, that's announced by the Debt Management Office yesterday. Give us your view in terms of where yields for this bond could be issued at.
The AMCON bonds or the
70 billion Naira,
auction.
yeah, the sovereign bonds next week.
Okay. The DMO did announce that they are going to cut the demand from 126 to 70 billion. This sparked of activity in the bond market yesterday because market players were obviously short, and they were hoping to cover their positions from the usually robust auctions. So we saw market players covering their positions, and bonds moved about an average of 60 basis points across the curve. The 3 years are currently at 10.5%. The 5-year benchmark bonds are at 11.2, while the 20-year bonds are at 13.95. I expect that the auction results would print slightly higher than the previous auction because just yesterday the 1-year Treasury bill was cleared at 9.9%. So we expect some price adjustment. So we are looking at 11% for the 3-year, about 11.5% for the 5-year, and about 14.25% for the 20-year.
Yetunde, what about the secondary market? What kind of yields are we looking at there?
Okay, the secondary market has dropped slightly. At close of business today, the 20-year bond was at 13.95%. And like I said earlier, this is because market players were closing out their positions. So after they were able to do that, market was a bit calm and waiting for the results of the auction. So the auction result will spark activity again.
Well, what about AMCON? Because AMCON is expected to issue bonds in exchange for 2.2 trillion Naira for bad loans. What impact do you think this is going to have on the Naira? You're talking about the Naira appreciating. Do you think this is going to be one of the factors pushing the Naira stronger?
Okay, the impact of the AMCON will be felt if there's liquidity created from the bond issuance. There's been some speculation about how the bonds would work, whether they're going to issue 7-year zero coupon bonds, and if they do this, banks will be able to repo the bonds at the CBN window to create liquidity. So the impact on the NGN will be if there's liquidity released from the repoing of these bonds, and if in turn that liquidity goes into FGN securities, driving the yields down. People would also have possibly more liquidity to buy USD. But we expect the Naira to remain firm because there are robust external factors. Oil prices are still at the 87 range against the benchmark of 62. Oil production levels are meeting and perhaps exceeding the OPEC quota. So we expect that the impact of the AMCON liquidity, if any, would not move the Naira significantly.
What about the fact that many investors are talking about a possible overhang when it comes to the bond market, which could, of course, lead to a spike in bond yields? Do you think that it's going to be a growing concern going forward?
I don't think that would be a major concern because the liquidity to be released from the AMCON bond, it's probably going to be on the need-to-use basis. The other part of the equation is that banks that already have a shortage of cash have somehow funded their positions, be it from the interbank market, from customer deposits, from the intervention funds, because you would recall that the Special Intervention Fund released about 200 billion liquidity into the market to refinance new and existing risk assets to manufacturers. So the banks have funded their positions, and the bonds will be repoed on a need-to-use basis. So the level of movement in interest rates will depend on the liquidity that these bonds actually bring into the market.
Yetunde, what about where you expect to see the most interest coming to the fore when it comes to dated paper? I mean, are you looking at the 3-year, 5-year, 7-year, 10-year, or 20-year bonds? Are investors becoming more and more confident to invest in the longer dated paper?
People are becoming more confident in longer dated papers because the yields have gone up. They are tracking inflation closely. So we expect to see interest in long durations because that's where the greater impact will be going forward.